Is Beijing waiting for the US midterms before re-engaging? In the meantime, is this just a war of attrition now?
Well, Heidi, certainly the view increasingly here in Beijing is that there's not going to be much traction on any negotiations around trade until after the midterm elections. And that's one reason why Beijing pulled out of these proposed talks that were being lined up for this week. And as you allude to, they are also, the Chinese, building out their defences. They're planning additional stimulus, we hear, to try to offset some of the pain. And they need to be doing that because, of course, Trump has said that he would hit back with additional tariffs on another $267 billion worth of Chinese goods should China retaliate, which he has done, of course, slapping tariffs on $60 billion of US goods. So it looks like both sides are becoming more entrenched. We've heard from Bloomberg Economics, by the way, our chief economist, Tom Orlick, writing a piece saying that for the moment, the advantage is with the US, largely as a result of that tax cut fueling a growth or tick up in the US equities, but that calculus or that dynamic may change, particularly if you start to see the tariffs eroding some of these corporate profits in the US, if you do see the political landscape change after the midterm elections, and if you do see an impact on US equities, then potentially the advantage could then switch to the Chinese. But for the moment, it is the US that is in a strong position, according to Bloomberg Economics.
And Tom, we've already seen Fitch Ratings downgrade global growth forecast for 2019. How bad could it get?
Yeah, so Fitch cutting their forecast for 2019, as you say, to 3.1%, down by 0.1%, but saying that the risks to the downside are to the downside. And we're hearing from the likes, of course, the Retailers Association in the US, the Retailers Leaders Association, saying that their members are facing a tsunami of tariffs and they've been left scrambling to deal with these. We're also seeing the energy sector in the US starting to be impacted as well. We're talking a lot about oil today for all the obvious reasons, but we've heard that Unipec, which is a trading arm or trading unit of Sinopec, is going to delay plans to increase imports of US crude. And bear in mind that China is the largest buyer of US crude at the moment. We saw about 15 million barrels in June. So it could impact Chinese demand for US crude. We know that China has imposed additional tariffs on US LNG. So you've got the retailers, you've got the energy mix starting to take an impact. In terms of Bloomberg Economics, again, referring to them, their analysis is that in China, you're going to see a drop of about 0.5% of GDP. It's going to lead to a cut of about 0.5% in the second half, this trade war, as it continues to grind on. We're going to get another picture or detailed picture of the impact, particularly on China's manufacturing and factory sector, with industrial profits out later this week, as well as manufacturing PMI. So we're going to be keeping a close eye on that to get a sense of just how much of an impact it's having on the ground here in China.